All right, let's get straight to it. The market is a total war zone right now, and I know many of you are feeling it. You're seeing these confusing signals getting absolutely chopped to pieces by fakeouts, and your portfolio is probably swinging harder than a pendulum. That's how you get wrecked. But that's not what we do here at Crypto Whale Radar. We don't guess, and we sure as hell don't gamble. We analyze. We hunt for the whale tracks. So in the next few minutes, I'm going to slice through all that noise and show you precisely what the big money is looking at, the levels that actually matter, and the traps they are setting for everyone else.
So what is it? I mean, really, what's the move here? Are we about to see a massive crash to new lows? Is this whole thing just a pathetic bounce before the next leg down? Or is this the moment, the consolidation right before that explosive move up we've all been waiting for? Right now, the market's telling three different stories. And if you're not paying attention, if you don't get what's happening behind the scenes, you are going to get steamrolled. So let's pop the hood and see what's really going on.
And here it is. This is the single most important idea you need to burn into your brain right now. So listen up. The big picture, the entire traditional finance world, it looks terrible. The stock market is screaming, danger, danger. But crypto, well, crypto's kind of doing its own thing, isn't it? It's showing this stubborn, almost defiant strength on the lower time frames. And that right there, that's the conflict. That's the battle we've got to understand to get an edge.
Okay, before we even pull up a Bitcoin chart, we have to talk about the S&P 500. I know, you came here for crypto, but ignoring this is probably the biggest mistake new traders make, and it will blow up your account. When the stock market is weak, it's like a black hole sucking capital out of everything. And guess what? The big Wall Street funds that are in crypto now, they treat Bitcoin just like a risky tech stock. So when they sell stocks, they sell crypto too. What happens here is a huge deal for us.
Just look at this thing. The S&P is clearly, without a doubt, trending down in the short term. Lower highs, lower lows, the whole 9 yards. Now, yeah, okay, it's hitting oversold on the 4-hour chart, which means we might get a little fake-out bounce, a little hop to trick people into buying. But don't fall for it. The bigger picture, the multi-week trend is weak, and that means there's a massive headwind pushing against everything, and that includes Bitcoin.
All right, let's get to the main event, Bitcoin. And this is where it gets really interesting, because depending on how you look at it, Bitcoin is telling two totally different stories at the same time. One story is painting a really ugly long-term picture. The other one? It's a story of incredible short-term grit and resilience. One of these stories is lying to us, and our job is to figure out which one before the market decides for us.
Okay, this right here, this is the whole market summed up on one slide. On one hand, you've got the weekly chart, and it is flashing some major warning signs. There's a massive bearish divergence playing out. Basically, price went up, but the momentum behind it went down. It's a classic sign of exhaustion. Plus, the super trend indicator is bright red. Not good. But then you zoom into the daily chart, and what do you see? You see Bitcoin holding that 65 to 66K support zone like its life depends on it. This is the battle line. The bears see the weekly, the bulls are defending the daily.
So, if we're just stuck in this range holding support, then what the hell was that violent, insane price action we saw a few days ago? That massive dump followed by an immediate, face-melting pump right back up. I can promise you one thing, that was not random. That wasn't the market just doing its thing. Nope, that was a calculated attack by the market makers, and I'm going to show you exactly how they pulled it off.
What you saw is called a liquidity hunt. It's a classic move, and it's designed to do one thing and one thing only: to steal money from over-leveraged traders. They manufacture this volatility to trigger your stop losses, to force liquidate your positions and take your cash. And if you don't understand that this is happening, you are the one who pays for the move. You become the liquidity.
So what is liquidity? Just think of it like big pools of money sitting around. It's all the stop-loss orders from people already in a trade, and it's all the liquidation points for people using way too much leverage. These money pools always build up in the most obvious places, just below a recent low or just above a recent high. And for a market maker, those pools are giant magnets. Their job is to push the price just far enough to slurp it all up.
And that's a perfect description of what just happened. It was textbook. First, they nuke the price just below that key support around 65.5, just low enough to hit all the stops and liquidate the longs. Then, boom, once they've taken all of that money, they reverse it and rocket the price higher, gunning for the other pool of liquidity above the recent highs, wiping out all the shorts who thought the dump was real. It's brutal, but it's efficient. And look, this is exactly why the exchange you trade on is so important. Personally, I only trade on BingX. They've got some of the best liquidity, so there's less slippage on moves like this, but most importantly, they're the most reliable platform I've ever used. For everyone watching, if you use my link in the description to sign up, you get some crazy good bonuses from the exchange. And You'll also get access to me personally for help with your trading. It's just my way of making sure my community is in the safest place possible.
All right, let's shift gears and talk about altcoins for a minute, because we all know how this works. What happens with Bitcoin doesn't stay with Bitcoin. It sends out ripples across the entire market. And understanding how those ripples are affecting altcoins right now is absolutely key to knowing if you should be buying them or running for the hills.
The chart you have to watch for this is Bitcoin dominance. It basically just shows how much of the total crypto market cap is in Bitcoin. And as you can see, for months now, it's just been going sideways. It's not really going up or down. That tells us we're not in an alt season, but we're also not in a Bitcoin season. We are in a follow the leader season. Whatever Bitcoin does, altcoins are going to do it too, probably just with a lot more drama.
So if we take a quick peek at the majors, you can see Ethereum is just a carbon copy of Bitcoin's chart right now. It's just following along. But things get a little more interesting with XRP and Solana. Check this out. Both of them are starting to flash a potential bullish divergence on the short-term charts. It's a tiny little glimmer of hope, but it's a sign that the selling pressure might be getting exhausted. This is a big deal, and it's something we have to watch. If you want my real-time updates on if these signals actually play out, you'd better be subscribed with the notification bell on, because you won't want to miss it.
Now let me quickly explain what a bullish divergence actually is, because it's a super important tool. It happens when the price of an asset makes a new low, but your momentum indicator, something like the RSI, makes a higher low. See that? Price is down, but momentum is actually starting to curl up. Now, let me be crystal clear. This is not a guarantee that the price is going to reverse, but it is a very powerful clue that the bears are getting tired and running out of steam. It's one of those pro-level setups you just have to know.
Okay, we've gone through the whole picture, the macro, the Bitcoin conflict, the altcoins. Now it's time to put it all together. No more theories, no more fluff. These are the exact numbers, the critical levels that you need to have on your charts right now. This is your game plan for the coming days, so pay close attention.
So here it is, plain and simple. The entire market is a tug of war. For Bitcoin, that 65 to 66K zone is everything. It is the absolute line in the sand. If the bulls hold that line, they've got a shot at pushing up towards 68K. But if we lose that level, and I mean we start closing daily candles below it, then look out. The door to 60K opens up real fast. As for the alts, they're just along for the ride. All eyes on Bitcoin.
And that's where we stand, at a showdown between an unstoppable force, the weak macro trend, and an immovable object, that critical crypto support. Something has to give. Which one do you think breaks first? The answer to that is going to define the market for the next few months. Drop your thoughts in the comments below. And hey, if you feel like you actually learned something that will save you money, do me a favor and smash that subscribe button. Now, if you want to know how to avoid the next big trap the market makers are setting, you need to go watch this video right here. Trade smart and don't be the liquidity.